Hey y'all, I just realized that that was muted, so y'all might not have heard the music going um, on Zoom there. So sorry about that. Um, all right, so happy Tuesday. A couple of just housekeeping items. There are some flyers on the table around you. So we do have a social media coach coming in next Monday. We are paying for her to come in. So please, please, please help us fill the room. Come in, be here. She is Sue Dye's coach. And I will tell you, like, I've seen a transformation in Sue's social media game in the past 6 months or so. Like she's getting tons of views and tons of business from it. So those girls are coming in from Arkansas. And that's going to be awesome. So please come in and support that on Monday and Tuesday next week. I'm going to let Christy say a couple of things. She brought some donuts in today and stuff. I know there may be some more people trickling in, but Christy, do you want to come in? Yeah. No, you're good. And I know there's a lot of people on Zoom too. So, Christy, I'm going to give you this. Thank you so much for sponsoring today and bringing us some donuts. We're so happy to have you in the office.
Thank you. Hey guys. So there are some healthy donuts in there and they're really yummy. So I brought some little fake dollar bills back there. The reason is money saving. Y'all, the price of everything is going through the roof right now. So to be able to offset your clients' amounts spent towards repairs and replacements has never been more important. Average HVAC with these new systems that have been installed are running everywhere from 15, 12, $15,000 or more for a new unit. And that's just something that not everybody has their money saved up to do. So offset those costs of repairs with the home warranty. Help them to budget. I would much rather spend our average full replacement is about $2,000 to $2,500 for a new unit. That's a whole lot easier to stomach than about 12 to 15,000. So don't leave that on the table. Right now, you can ask for a warranty for your buyer, and odds are they're not going to say no unless it's a cash deal or one of those few multiple offers that we have out there. So why wouldn't you ask for that with every warranty or every contract? They can always say no and it can be negotiated, or the homeowner can pay for it themselves. What I'm seeing is a lot of agents at that repair discussion, once the home inspections came back and that unit is at the end of its life expectancy, it's working. There's no problems with it. The seller's not going to replace that unit. So why not at that stage, when you know it's just a matter of time, negotiate in the warranty or ask for 2 years warranty, $1,010. Let that be your negotiation tactic to prepare your buyers to be set up for a little bit of time, because you know a 20-year-old unit, it's not if, it's when it's going to go out. And not everybody has that money saved up. So you are in the business of making your homeowners happy, finding them a house, selling them a home, but also protecting them from things that may come along. So don't leave the warranty on the table. Don't leave the multi year warranties on the table. And don't forget the seller's coverage. It is available. It is just another thing to advertise that listing and make it stand out in the crowd. I'm here to teach all things warranty. I am here to help you. I'm here to guide you. I'm happy to be a part of Keller Williams, and I'm loving this new adventure. But I think setting the right expectations and helping you is so important. So lean on me and let me help you when I can. Thank you.
I love that. Yes, I was going to say too, like when you're in the middle of negotiations, or right now we're having a lot of buyers, right? They have a lot of options. So they're letting that inspection really scare them and saying, like, I'll just go find a different house. Don't do that. That wastes their money. So that you're like, don't let your clients get so scared and nervous that they're wasting their money on this inspection and they're just jumping from house to house. Like, it's your job to calm them down, get Christy on the phone and say, hey, this is what the inspection says. What can we do with the warranty? How can we do a 2 year warranty? That's a great tip. Um, so instead of letting it fall apart at inspections, which I think people are seeing a lot right now, like go ahead and prepare them that there may be a lot on this, and this warranty is going to take care of these items if we need them, right? So, yes, be the expert. And if you're not the expert in what the warranty covers, that's why you call Christy, right? So she can say, yes, 100%, that's going to be fine. Hey, we may not cover that. Just want you to be aware of that, right? So use her to help keep these deals together. because that is just a huge resource. And I know that's a sore spot for a ton of people right now. Kind of really just falling apart at the table, or way before the table at the inspections. Don't let that happen. So use her, get her on the phone, so you don't have to be the expert in that. But I appreciate you, Christy. Thank you so much for coming. Okay, well, we have David here. He is going to talk today about what he does for a living. He is Sarah's personal bookkeeper, and she put out a video. I know that how valuable he's been in her business. So I'm going to let him kind of go from here, and I'm going to I can control this for you. Yeah. I can control this for you unless you want to, but I'll let you take it away.
Sounds good. Appreciate it. Well, good afternoon or good morning, everybody. Happy to be here. Happy to talk about financials. Not always the sexiest subject, and I know that's that's not the ideal way to start off a conversation. But who woke up this morning and was looking to start doing some math? Any of you? Where am I looking? Do I have anybody on the screen too? All right. Just me? All right. My wife says that spreadsheets are my love language. So I will do my best to not be nerdy today, but I guarantee you there is something in my presentation that is highly important for each and every one of you, whether you're online or here in the office. So we're going to talk all things money today. The goal would be to how do we keep more money in our pocket? Does anybody enjoy paying Uncle Sam? Nobody else? Okay, good. So let's start off by just a little bit of a background. Go to the next slide. You're good. That's my better half. Her name is Christy as well, believe it or not. 16 years, 17 years in business now. I have 48 employees. We manage about 1,000 different financials every single month for clients across the United States. When I say I understand real estate, trust me, there is nothing that I haven't seen before. I think the best part of this conversation is that, and I'm not a name dropper and I'm not going to do that today, but I will tell you some of the most profitable, successful, wealthiest clients in real estate, I guarantee you know their names. And they all started on a spreadsheet. So today's conversation goes into how do we do a little bit better? How do we manage our conversations around money? And how do we keep score? So we're going to head to the next screen. We're going to talk about 4 things today. Benchmarking success. I think all of you will see what I'm talking about as soon as I pull up that screen. The importance of keeping track of your numbers so you can have a better management conversation. We're going to ask some questions about our numbers. We're going to reverse engineer conversations, and then we'll get into a little bit of taxes today. I know that's not a fun subject, but is there anybody exempt from taxes in here? Okay, all right, then we're in the right spot. Okay, first and foremost, the goal is understanding that we have set up our real estate business as a separate entity, not only for legal purposes, but for purposes of tracking and having a good understanding of what we're doing. The goal here is that our daily habits are organized as well, which means like if we go to Costco and we're buying diapers for the baby and we're buying wine as client gifts, we need to make 2 transactions specifically so that we're keeping track and organizing everything, because at the end of the day or at the end of the month, we are going to have a report card and we're doing well or not doing well. Hopefully you're here today to learn a little bit about keeping some money. And then if we organize our financials appropriately, learn from them, the goal would be to keep more money in our pocket by creating additional assets, different revenue streams, and not paying taxes. So we'll go to the next page. Okay. This is something that you have likely seen in the past. This is a accurate, up-to-date, true information on what the real estate industry is doing. You're welcome to take a picture of it or a screenshot. Let me tell you how I got here today. This is basically all of the anonymous data of the client base that we manage. Like I said, just under 1,000 clients. We take their information and we put it into specific buckets. The way that we're going to look at this and review this today is in different columns. So you can see at the top there, you start off with $300,000, 300 to 550,000, so on and so forth. This in your world would be gross commission income, GCI. Okay? And it's really important that we understand GCI today because the conversation is going to shift, and I'm going to show you why that's important. So long story short, you can see the percentage of teams. So 18% of the teams that we manage do less than $300,000 a year in top line revenue. 15%, 300 to 550, so on and so forth. That's not necessarily important for you to know, but that's kind of where our client base sits. With those revenue numbers, I'm going to shoot straight to the bottom, and I'm going to focus on the 300,000 or less top line revenue numbers. But you can see at the bottom that the net income for these businesses is 42%. That's a really positive number. It's not negative. It's not we're barely scraping by. We're 40%, 42% profitable on a $300,000 top line business. That's really good until we have to pay Uncle Sam. So what can we do to, for management purposes of your business, reduce that so we're limiting our liability? But the purpose of me showing you this today is so that you can see a couple different things. Number one, businesses are thriving. How I believe they're doing that right now is they're managing their expenses. That's why we're able to have healthy, profitable businesses. The other side of that I think is super important is we're going to start reverse engineering. So in my example here on the screen, you can see that, again, $300,000 bracket that on average, teams are spending about 11%, 11.4% on lead generation efforts. Okay, and I'll show you some examples of kind of how I would talk about this here in the future. So I'm going to pause here for a quick second if you want to take a screenshot. But that's the most accurate, up-to-date information as of Q3 and Q4 2025. So this isn't like historical data. This isn't something that I just kind of pulled out of thin air. This is actual information that has been reviewed and comes out as a good scorecard model that you yourselves in the industry can compare yourselves to. All right, next screen. Maybe. Okay. I talked about top line GCI, and so that's where my conversation comes into apples to apples. And I do want to make sure that you are comparing your business appropriately to specific models that are out there so that we are not having a conversation about why are they doing better or worse than I'm doing if we're not comparing apples to apples. Again, it kind of reverse engineering into some conversation so we can skip to the next page. This is, okay. Oh, one more back. Thank you. Oh, other one. You're good. You're good. Okay. If I was sitting in your shoes, myself in the accounting world, I don't have a model. Like I can't go to Mr. and Mrs. CPA and say, what are you taking to the bottom line? Well, how much are you spending here? There's just not a great platform or hierarchy of how we all spend money that I can go and get that information. However, this business, this industry is actually organized where we can now reverse engineer conversations. So my first example, and I just picked these, but I want you to see kind of what that model does for you. If my business does $300,000 in top line revenue, and on average, they're spending about 11% in lead generation efforts. It's a simple math equation, but I can anticipate as a business owner in this business doing that size revenue, spending about $33,000 a year in lead gen efforts. Reverse engineer that or divide by 12 every month, breaks out to $2,750 a month. So as I'm budgeting and as I'm going forward, again, this will all make sense as I get through this conversation today, but that is what you can anticipate doing to earn revenue. Next one I did was, hey, I'm going to close 55 deals this year. Average sales point is $500,000. If I take 3% on an average commission, it's 15 grand. It's 825,000 top line for the year is what I can anticipate based on what I think I'm going to do with my team. Break that down into what most teams are doing, 37% profitability. I'm going to bring home about 300 grand this year, pre-tax. So that picture that you took can reverse engineer whatever spectrum or whichever bracket you're in and start having a conversation around forecasting, conversations around what I anticipate doing this year so that you can be more profitable. Next slide. There we go. What's important about this date? Taxes, yay. We just got through that, not even like a week ago, right? So when is the best time to start planning for 2027? Now. Yeah, it's not December 31st at midnight or 10 p.m. that night and trying to gather all receipts and going, what in the world's happening? If we want to make decisions about keeping more money in our pockets instead of paying Uncle Sam, we need to start thinking about it today. So we have to have a scorecard today and understand what our businesses are doing so that when April comes around next year, we're just business as usual. We're selling more real estate. We're not focused on, I wish I would have bought that property. I wish I would have done a cost segregation. I wish I, whatever the case may be. Okay. So I am not asking for everybody to just focus on taxes, but I am maybe requesting that we think about this at least at a minimum in quarter 3 or quarter 4 of 27 and put it on your calendar. Talk to your CPA. Hey, Mr. and Mrs. CPA, we're going to net about $300,000 this year. My spouse makes X amount of dollars in W-2 income. That's all going to roll down to how much money am I going to have to cut a check for? Now I've got 3 more months, again, based on all your planning. Okay, my question to you, would you rather write a check to the US Treasury for $24,000 or would you like a refund for $8,500? Okay, you don't have to answer that to me, but maybe write that down and think about it. And I'll tell you why or how this is important here at the end. Okay, this is where the nerdy math comes in. I'm going to do my best to make this as fun as possible. And this is super important. Every business in America has to have a scorecard. So I kind of use this analogy sometimes, but let's say we're going to hop on a plane at the international airport around the corner, and we're going to fly to San Francisco. Like, I hope that the pilot is looking at their GPS, right? Because if not, maybe we're going to end up somewhere cold like Canada. If you are operating your business without a scorecard or touching base with your financials every single month, we're actually running it blind. Is that bad? Well, to each his own, right? We're in charge of our own businesses. But I can tell you that those that are keeping track of their numbers like this are the ones taking all of the profit to the bottom line because we're paying attention to what's actually happening. So here is what I want to talk about. This is what I would call an income statement, profit and loss statement. You might hear the terminology bottom line. Like, what's your bottom line? It all is derived from this very basic financial statement. And there's 3 sections to it. And I'm not going to go into a ton of math, but I just want you to understand the flow of it because it's really important and it's honestly, it's not that hard. It's not that hard because I know that my 11 and 12-year-old do financial statements on our rental portfolio every single month and submit it to me. So if they can do it, I know everybody in this room and online can do it as well. So 3 sections to this financial statement. Green bracket at the top. Gross commission income. Top line revenue. Money is good. Commission income is good. Then we have bracket 2 and bracket 3. These brackets reduce our income. A couple different scenarios. Bracket 2 is cost of sale. This would be brokerage splits, team splits, company dollar. We paid for our client's home warranty, or we had to buy a refrigerator in order to close the deal. Those are all costs coming out of those commissions. Bracket number 2 is everything that it cost us just to close the deal. Bracket 3 is a little bit different. It's the largest one. This is swiping the American Express card. This is Starbucks. This is donuts. This is lead generation efforts. This is occupancy for desk fees. This is paying your attorney, so on and so forth. These costs we have a say in because we can choose whether or not to spend the money. And like I said before, the clients that are really bringing home the money are really paying attention to the money that they're spending and their operational costs. So that's bracket 3. Again, second grade math. Revenue, section 1, green, minus section 2, minus section 3, and ultimately we get to a net income number. That's it. This example has profit. Remember, this is not you. This is your business. This business example has a profit of $466,000. Who likes $466,000 as a negative number or as a bottom line number? Okay. Let me ask you a different question. It's not too far-fetched. If it cost you at home $50,000 a month to live, trust me, I see it. Mortgage, horseback riding, multiple properties, kids' underwear, shoes, the vacations with the spouse, yada, yada, yada. If that adds up to $50,000 a month, does that household, can that live off of this business? Can't. So it's good to know both numbers. What does my household require and what is my business? Is my business supporting my lifestyle? Yay or nay? I agree. 466,000 is a fantastic, profitable number. But if it doesn't support the household, it raises a different question. Okay. The only thing I did here was I put percentages with it. Okay. A couple screens ago, you all took a screenshot. Percentages. This is where this is deriving from. So instead of saying $466,000, I can say for every dollar based on my commission income of $1,007,000, my GCI, I took 46 pennies to the bottom line. Just a different way of looking at the information. I'm going to flip the screen here, but I really want you to pay attention to a couple numbers. Number one, the green box, 466,000. And I want you to pay attention to the highlighted blue number of 46%. We'll go to the next screen. Okay, perfect. Nope. Yep, right there. Anything change? What changed? Okay, good. The net profitability of this business stayed the same, but the percentage changed. Instead of 46, now we're at 58. A few slides ago, I said, hey, make sure you're comparing apples to apples. Most often, I see that those in the real estate industry are taking what hits the bank account, their net commission check, and they use that as their top line revenue, forgetting about the rest of the equation. Is it bad? No. Is it good? No. It just is. But I want you to understand that if we're trying to compare to an industry average, or why is so-and-so taking more to the bottom line, it's because they're able to really understand what's going on in their business compared to everybody else. So if you look at the top line revenue number, 797 and 55,000 cost of sale, that's what changed. So this screenshot is not including the team. So we'll go to the next slide. I'm going to show you a comparison side by side. There we go. Bottom line, 466 stays the same. We were talking about 46% profitability or 58% profitability. Neither's right or wrong. But to ask better questions of my business, I want to understand the full equation. So imagine this business not reporting their top line GCI numbers, or forgetting about all of the costs associated with earning that revenue. And it changes the percentage. I'm going to pause there. Any questions? Any questions online? Please.
So when you're talking about doing these, like, is this the kind when you're doing this math equation, right? And you're adding up your cost of sale, your cost of goods. Are you saying that the difference between the two is this person probably knows more of what's going on in their business because they know that it's actually costing them a lot more in the cost of sale? Does that make sense?
They're tracking their cost of sale.
Yeah, so they're probably spending it. They just don't realize it. Is that what you're
Correct.
saying? Okay.
Yes, exactly.
Okay.
So another way to say that is if you don't track what you're spending, how can you ever make an adjustment? Okay. I see a lot of clients do a lot of outside referrals. Bad, good, and different. Understand that's a cost to the commission. It's okay to do those, but understand sometimes there's an expense to it. And if we're not managing it and we're not paying attention to it and we keep doing those, then we start realizing that it's really not a 3% deal anymore. Okay, we have to pay attention to the costs.
I'm sorry, I may be jumping ahead, but my brain is going here. So if the equation on the left is you're actually tracking it, that affects your taxes.
Great question. No, none of this affects your taxes. Why? Because the bottom line stays the same. Okay. We don't pay taxes on top line revenue. We pay taxes on the profitability of the business. So that's why this is so important as I look at this and show you that everything stayed the same. Net income, operational expenses, it's just how are we reporting top line GCI? You don't have to, but then you can't track what you don't know. So how can we make better decisions understanding like, maybe I shouldn't buy a refrigerator for every closing. I realize that costs me money now. Miss, did you have a question? So the question is regarding cost of goods sold. So all we're doing is we're grossing up the revenue and grossing up the cost of sales. It's a net zero effect. All we're doing is we're paying attention. And you can get all of this information off your DA. Okay. Good question. Okay, we're going to move on to the next screen. Maybe. There we go. Okay. This is just a general conversation, but I wanted to show you the comparison. If I use the same financial statement in the prior screen and I put percentages with it, and then I put that same model to the conversation, and I'm just going to pick on this. We're going to go straight to the bottom line. The yellow would be the model. And so the model says we should take 34%, 33.8% to the bottom line. That's what the model says. That's what everybody's doing. But this business is actually taking 46% to the bottom line. So as a comparison, you could say, my business, my team is actually more profitable than most businesses, okay, by 12 points, 12.5%. So this is kind of how you would take your financial statement, compare it to an industry average, and then understand if you're doing better or there's some room for improvement. Specifically, if I were to pay attention to salaries and benefits, the model says 11.3%. Again, this is an example, so go back to the data that you took a screenshot on. My business did 12.37%. So I'm actually over budget in this particular category. Overall, I'm doing really well, but in this particular category, I'm spending more. Doesn't mean you have to make a change. It doesn't mean that we have to go release half of our team. It just means that I understand that I'm a little bit over in this category. Now I can make a decision on it, or maybe I'm quite just okay with it. Okay, maybe I'm in growth mode and I know that I need that second EA to grow my business. I know that I'm going to be heavy in salaries until the revenue picks up again, but I'm proactively hiring for when that time comes. So I'm okay being high in salaries today versus the average. Okay, just a different way to think about it.
So if you're looking at lead generation, do you ever advise people like, hey, you're actually not spending enough on that if you're trying to grow? Do you have those kinds of conversations, or is this just something for them to be aware of?
It's a great question. It's just like an over budget conversation. You can do an under budget conversation. I'm 2.5 points shy of what everybody else is spending. Revert that into dollars and go, I could go spend X more money in lead generation efforts to go gather more business or close more deals. So yeah, you can absolutely reverse engineer the conversation.
Yeah, I think that's where, like, transparently, I'm like, I don't spend money, and like, no matter how much I make, I don't spend any extra, which I know would help, right? Bring in more lead generation, more leads. And I know that was a conversation I heard a lot of MREAs talking about when I went to a different market center, talking about how they actually found that if they wanted to hit MREA status, they needed to spend more money on lead generation because they were bringing in $800,000, right? And we're not spending enough to get to an MREA status. So definitely something to think about. And we have some like heavy hitters in here who that may relate to, like maybe you're not spending enough on lead gen. So anyways.
Yeah. Great. Good question.
Are you?
Any others before, bless you. Any others before I head to the next screen?
Yes, I have a question.
Yes.
So with the percentages that you have to the right in the yellow column, how are you coming up with the percentages? Are you dividing it by the amount of money you make divided by the salaries? Like, how do you come up with that percentage?
Great question. Basically, you can take any of those dollar figures on the left-hand side of the report and divide it into your gross commission income. So that 1,000,007 that's on the screen, that's how the percentage is calculated. And I think you bring up a good point then, because imagine, and you saw this a few clicks ago, which was if you're comparing it to just the deposit that hits the bank account and you're not paying attention to cost of sale and top line revenue, your percentage is going to be off. There's the apples to apples. Make sure you're comparing your business appropriately to the models that are out there. Yes, sir. So the questions in regards to looking at lead generation specifically in this question, and do we reinvest a certain percentage of your profits back into a specific area of your financial statement? Yep, good, okay. No, I do not see a trend. I think that, and I'll show you on the next couple of screens why I believe that. And I always go to percentages are fantastic, but you can't take a percentage to the bank, right? It's a dollar that you can take to the bank. But then how do we save that dollar? So that's where I'm going to get into in just a few minutes. And if the business is healthy, I might take some of that profit, that 5%, let's say, and reinvest it in maybe a different ancillary revenue source, whatever the case may be. But I'll show you that. It's a good question. It's a good lead up to what I'm getting into in just a minute here. But no, I wouldn't say that the client would go, I'm going to take 5% or whatever that works out to dollar-wise and reinvest it into lead gen. Maybe they would, but I don't see that across the board. Okay. So I was kind of just showing you half the equation. Sorry, not sorry. I want you to see what the opportunities are inside your business that can help you save on taxes. So what I think is really important for everybody to understand that when I was showing you the 466 profitable number, which is still there in the green bracket or column rather, that was just a true brass tacks of what my business is doing. I didn't tell you about, oh, I'm paying my kids a salary. I didn't tell you about the 2 Porsches that I have or the duck boat for the lake properties, or I didn't tell you about the rental property that we own. Like all of that's extra. But if we're looking at apples to apples conversations about what is my business doing compared to everybody else, we have to take all of that what do I call it? Extracurricular is my word. All of that extracurricular stuff out of the equation. Because if it's all convoluted, it's hard to make a business decision. Why is my auto expenses so much higher than everybody else? Well, I have 2 really fast cars. But you can't compare 2 really fast cars to everybody else that doesn't have 2 really fast cars. Okay, that's just one example. Or my wife or my spouse is doing coaching as well. Well, is it 2 versus 1? Okay, so we have to have a conversation. So what I really want to show you is on the bottom right-hand corner, highlighted in yellow, we have $355,000 of net income. That's the real business's net income. Okay, the green bracket, the 466 that I was all showing you a little bit ago, that would be what I call the above the line or true real estate business in my entity. That's the comparable. And then at the top of the screen, you can see different conversations. So I might wholesale some deals. I might have a rental property. And then I call it indirect or below the line. These would be costs that the IRS says I can expense these certain things in my business. But I don't know if Joe and Bobby and Susie are all doing that too. So I don't want to convolute my management, my direct side, my above the line financial statement. So I wanted to break it out for you in these different columns so you can kind of see kind of how it all flows. In the wholesale side, example, we earned $11,200. I also had some costs in that, but that profit center, those efforts, has a net income of $7,200. Okay, just an example. You might see coaching in here. You could see staging company inside here. There's lots of different things that people do. Neither is right or wrong, but if we convolute the information, it's hard to make a decision. Okay, I'm going to shift a little bit to taxes. Understand, everybody in here, your business doesn't owe or pay taxes. We as people pay taxes. So everything that your business does is going to flow into us at a personal level by the end of the year. Okay, and then we can do some crazy calculations, but I won't bore you with that. But what I do want you to pay attention to is this business has profit of $355,000. Okay, that's the kind of the focus number for the next couple of slides. Okay. Bottom line didn't change. $355,000. Can we all agree? Okay. Here's a different question inside my business. I have 2 yellow brackets or gold brackets in the upper left-hand corner. What am I doing? What I'm doing here is I'm trying to understand, can I replace myself in my business and have somebody else manage it for me? And so if I were to do that, and for example, it was 25% of every listing, it would cost me in this example $125,000. So my bottom line used to be 466, is now 341. Left-hand column, all the way down to the bottom. Okay, if I were to replace myself. Now, going back to the 466, I said if you had $50,000 spend in your personal household, I can't leave my business. I can't step out and go do something else, because if I were to do that, it would cost me an extra $125,000 in this example at 25% of every deal on the listing side, which means my profit just shot down. And now instead of 466, it's 341. So if you're paying attention to your numbers and you can start asking different questions, what if? What if I were to hire somebody to take over for me? There's a cost to that. And so now I can start running my books in a way that I'm like, okay, I'm not there yet. I can't step out yet. Just a different way. Again, I use a GPS and headed to Canada. Like, maybe we head to Cabo instead on accident. That'd be kind of cool. But if you're paying attention to the numbers, you can reverse engineer conversations. What if my business were doing this? What if we did this? And then my main point at the bottom right-hand corner is this did not change a penny for tax purposes, right? Because we don't want to mess with that. We do want to pay taxes on the correct net income of our business. And so all I'm doing here is just having different conversations within my business. Next screen, please. Question, go for it.
I'm confused on if you did pay for listing management, let's say, like I hired him to be my listing coordinator and I was paying him 25%, $125,000. Would I not 1099 him that, and that would take away my taxes for that?
That's a great question. If it becomes an expense. Right now, we're just playing games with our numbers.
Okay, got
So
it.
there's no money movement in this conversation yet. That's a good question. But yes, if you were to replace yourself and there was a check that left the bank account, it would be an expense. Right now, we're just forecasting what if I did do that?
Okay.
How would it affect my bottom line? So instead of making that hire today, I can forecast that I'd be living off $341,000. Can I do that? Yes or no?
Okay, got it.
Yeah, good question. Okay. This is taxes. I promise I'll get through it quick. And it's not sexy and it's not fun, but you all said that you wanted to save some money and not pay Uncle Sam. So this is how I'm going to show you to do that. I'm sorry, I'm going to show you what's possible. Okay. It may or may not apply to you, but this is just one conversation. I'm going to pick on that rental portfolio. Remember, we had $48,000 top line rental income, and then the profitability was $12,000. I'm making all of these numbers up. Okay, so this isn't somebody's financials or anything like that. I just want you to see the concept, the idea, the goal of what it could look like. I'm anticipating that I bought this property for $500,000. A portion of that land was 75. So the building, what's depreciable, is 425 grand. That's the concept so far. Next screen. We have this awesome tax advantage called depreciation. Many of you might use it on vehicles to reduce your bottom line, equipment, but also on rental portfolios and properties. So there's a couple different ways to look at depreciation. You can do it on a straight line, which means you just take the number and you divide it by however many years you're going to depreciate it by. Normal rental property is about 27 and a half years. And so this is what it does to the bottom line. Pay attention. You'll notice that 425,000, which is depreciable, if I take depreciation over 27 and a half years, that's 15 grand automatically off of your business's financials, which reduces your net income, which then reduces your what? Tax liability. So beforehand, we were at 355 net income. Everybody remember that? But because I depreciated this property, straight lined it, it created a $15,000 additional expense, which reduced my profitability in this business to 339. I'll take it. Next screen. If we were to do a cost segregation instead, the same property, everything stayed the same, but we were to cost segregate it. Let me tell you what that means. It's a fancy way of saying we're going to rapid depreciate it. That's all that means. So instead of 27 and a half years, we do a study on the property, and instead of taking the whole unit, we start looking at, well, we can expense the walls and the furniture, or the carpet and the flooring versus the plumbing, and we take specifics out of the business, which is why a study has to be done. And then we can take more of that up front in year number one. It's really cool. And so in my example here, without going through the numbers, instead of the 15 grand deduction, it works out to like 138,000 in year one on a $400,000 property. Wait a second. So you're telling me that I can do a different tax strategy around the stuff I already have, and instead of paying taxes on, what was that, 355, now I'm at 217? Yes, please. Okay. Again, there's other ways to do this. I just kind of wanted to show you the flow of the financials. We first started talking about what is my real estate team doing, then what is everything else that's going on, and how can we reduce those bottom line numbers for tax purposes, but then keep more of it. This is just one way that you can do that. We'll go to the next. All because you changed your tax strategy. So, I don't know, for 6 slides, I said 4/15/2027. When do we start talking about taxes? It's not December 31st, because you have to be proactive and do this stuff. And if you don't, that's okay. Just understand you're writing a bigger check. Yep. Great question. You can't, so cost segregation specifically is what I assume your question is regarding. The largest reduction is in year one, but then you still have years 2, 3, so on and so forth. It's just not as healthy. But you can take that tax savings and go reinvest it in building number 2, right, and roll it. Yes, sir. So taking a personal property and flipping it into a business asset and then depreciating that. I believe the answer is yes, but I'd have to verify. So I don't want to tell you 100% yes, if that's fair. There's more to that question too, behind the scenes of other stuff you would personally have going on, which is why it's hard to answer. Yes, sir. Straight line depreciation. Great question. We take straight line depreciation over the 27 and a half years. So every year it's 15,000. So every year you're getting the benefit of depreciation, right? But just in the cost segregation conversation, you get a bigger initial upfront. Correct. Yeah, it trickles. Yes. I mean, the goal would be like our real estate business is still healthy, earning money. So instead of taking all that profit and paying taxes, we take some of that profit and reinvest it into the business. We take that profit and go buy another rental property or whatever. Everybody does something different. There's no right or wrong. Invest in a pizzeria. I mean, whatever, just correct. Okay. I asked the question earlier, would you rather write a check for 24 or get a check back for, yes, sir?
Repeat that question.
Anything else that's just as depreciable that you get the tax benefit on? You could do larger investments with larger buildings and things like that. Like you could go be one of 10 investors in a $10 million building and have them do something like that. Again, that's real estate, but that's an option. You could go buy a vehicle but then the question becomes, do you need the vehicle? You want to spend the money just to buy the vehicle? Like if you're doing it for tax purposes or if it's really a need, that's spending money. It's a great investment. Yeah. It's a great tool. And there are other things too. Yeah.
I was going to say, what if you maybe just, that might be a silly question. Never mind. Okay, if you're just investing, let's say in like the S&P 500 or with a financial advisor, how does that help, or does that help with tax purposes?
So the question would be like taking some of that profit and putting it into the stock market and so on and so forth. That's going to be after tax dollars, right? So I mean, the profit that you have, you just chose to go put X amount of dollars in S&P 500. Yes, you're earning money on that, but then you're also
paying taxes right now.
There's no like depreciation or large like awesomeness on that to reduce tax liability. Now, if you're set up appropriately in your business and you start doing some type of a retirement fund off your W-2 wages inside your business, like that all can help lower that 466 profitable number, right? Paying kids a salary, that could help. Again, has to be organized, has to be a valid reason. I guess maybe I should have prefaced this like, my request is don't go out and start implementing all of these things, like have a conversation around, is it right for me? But I just want you to see like, there's a lot of possibilities out there and there's a lot of teams and agents making a lot of money in this industry because they're paying attention to what's going on in their business. Okay. Yes, ma'am. So I mentioned purchasing two vehicles just as an example. No, I personally did not do that. But I've seen people go and purchase a vehicle because it does meet the IRS guidelines and they can put that into their business. And the same thing on depreciation. You get the same tax benefit, but that's year one. So it's not like you consistently get. So if you go to buy a Tahoe for 80 grand, year one, you get an $80,000 deduction. But in year two, you're still stuck with the Tahoe and you don't get any depreciation, quote unquote, expense in year number two. Good question. Love it. Okay. 24 grand, write the check, $8,500 back. Okay. Who's right? Next screen. You're all right. It's all based on what did you decide to do with the information that you had. Okay. So this is just an example. I won't go into too much detail, but understand you could have chosen to do a cost segregation. You could have chosen to do a depreciation, or you could have just laid your financials out as is. And assuming that you paid estimated payments of $40,000, that didn't change, It could determine whether you got a refund back for $8,500 because you paid in too much. It could be where you had to write a check for $24,000 because you didn't do anything. Nobody's right or wrong in this scenario. It's what did you do with the information that you had? Let's go to the next one. These are just some tax ideas. Again, please do not go out and just implement all of these. It's just an idea. It's what there are a lot of clients do in the industry. Talk with your tax preparer. Okay. Here's what I would call a burn rate. That's also what I would call a break-even number. This is like my most fun number. So if we were to pay attention to that green bracket initially, you can reference it by the 466 number all the way down at the bottom. I'm specifically looking at our operational expenses. All year, between meals and entertainment and lead generation and office fees and my attorney and I spent $275,000 for the year. Again, just an example. Divide that number by 12, and it comes up to roughly 23 grand a month. That's it. That's all I want you to understand. Taking my expenses, dividing it over 12, roughly $23,000 a month. What am I doing with that information? Let's go to the next screen. Well, if I know my business requires $23,000 a month just to break even, there's no bonus at the end of the year, there's no extra money to go purchase a new vehicle, there's no tax savings, it's just breaking even. And then I have the same conversation and I say, well, my household budget is $7 grand a month. I gotta pay the mortgage, the kids have sporting events, my utilities, and again, made up numbers, $7 grand. Well, I know that it costs me about $30,000 a month to live. My break even's 30 grand a month. High, low, it's just a number. Yours is whatever it is. If it's too high, cut costs. If it's not high enough, understand what it's going to take to require to earn that. So $30,000 a month between my household and my business. Again, made an example. If my average commission check take home is 10 grand, how many deals do I need in order to break even? 3. I have to close 3 deals to live. Have to. Here's the best part about real estate. If we know our numbers, we automatically know what's coming down the pipeline. Chances are you already know what you're going to close in May. Chances are you already know what's pending in June. And if we're not closing 3 deals in May or in June, we get to make some decisions when? Today. We're not going to wait till June to make the decision. So, one less trip to Starbucks. We're not going to invest in that today. We're going to pull in another deal. We're going to see whatever we can do to have more revenue. Okay? Again, these are all break-even numbers. So if you want to add in the trips to Disneyland and the new vehicle, and you want to add in these things, then your closings might be 4 closings a month. Understand, none of this is good, bad, or indifferent. It's just understanding your numbers so that we can very simply have a mathematical equation and know if we're winning, if we're headed to Canada, or if we're headed to Cabo. Next screen, please. Okay, here's a budget template. You're welcome to scan the QR code. I'm not going to reach out to you and beg you or anything like that, but if you want to download a budget template just to get an idea of what you're doing in your own business, that would be a free tool for you to use. Here's my goal. My goal for you would be, if this is all speaking a different language, then let's start today with just taking the first step. Let's separate our business life from our personal life. Let's set up a separate checking account for our business efforts. Commission checks go in there, business expenses come out of there. Start to learn how your money works and how it flows. If you've been in the game for a while and a business owner for a while, maybe we proactively start paying attention to monthly numbers. Do I have enough revenue to cover expenses? Am I not spending enough? Could I invest more in lead generation to go earn more closings? So The best part about this is everybody gets to do whatever they want because it's your business. I think my last slide. Yeah, go for it. Okay. Hopefully, you took one nugget away today. I really appreciate everybody staying awake because I know it's not the most fun topic to talk about, but it affects everybody in the room. Whether you're a W-2 employee, whether you're owning your own business, it affects everybody because it's taxes. Okay. Questions, comments, ahas, feel free to share. Depreciation wise, question is it an either or between depreciation straight line or cost segregation? Yes, most people just do a straight line because they don't have a tax benefit or a need to do a cost segregation. Now, there's a caveat to that, right? Like, we have to understand, like, what's the goal of the property? Are we going to sell it in 2 years where we have to recapture some depreciation? Or are we going to 1031 it? Like, I'm just showing you ideas, which is why I want you to make sure you talk to your tax preparer. But these can all just be general concepts of what if I were to go do this or that? Yes, ma'am. Yes, my team does both sides. Yep. My goal today isn't to sell though. My goal, I mean, I'm happy to have a conversation, but my goal is like just to open the eyes and just be like, this is how 1,000 clients that we're managing right now are winning because they're asking questions of their financial statements. Yeah, yeah, absolutely. But I mean, it's just as simple as, no, it's not as simple as, but if the cost for an outside service may not be the most beneficial, so we have to understand what is the revenue being brought into the business, and there are less costly ways to manage it. You could do it on a spreadsheet, which is what I kind of gave you there in that budget template. Like, you could plug in your GCI numbers, and then if you're spending appropriately through one checking account or American Express card for your business efforts, then you can go in and plug in, like, this is how much I spent at Starbucks, and this is my desk fee, and this is like, and it kind of gives you that profitability number. So it's a start if you want to start for free. Uh, we we do not coach or consult unless we have an agreement for like bookkeeping services because it's hard to consult on information we don't have. Um, our clients roughly start about 200,000 top line revenue a year and go from there. I have a client doing a 26 million top line. It's crazy. It's awesome. But guess what? They all started on a spreadsheet too. If that's where you're at. I don't know. I mean, I don't know where everybody's at in the room. Yep. I have an entire team that would data entry, cradle to grave, data entry to financial reporting, produce the information for you, send it to you on whichever cadence you sign up for, usually monthly, sometimes quarterly, depending on how your revenue size works. And then you would have that information not only for management purposes, making business decisions, but also have the ability to have it tax ready by the end of the year. So we're not guessing, we actually have it ready to go.
So with those reports, if someone were to hire you, because we do have some heavy hitters in the room, if they did decide to add your services to their business, do you consult with them of like, hey, this is something we could do with what your situation is? Like, or
yeah, there's two sides.
Information.
First, it's the bookkeeping side, which is organizing the data, having an accurate conversation. Then there's a tax side of things, which is compliance work, meaning filling out the forms for taxes and here's what you owe. And then there's more of a proactive, forecasting approach of what is the goal of the household. Because again, it's not just the business, right? Now we have a possible spouse and we have dependents and we have tuition and all kinds of different things. So every conversation is unique. So we could take it as far or as little as you'd want. On the tax side, everything funnels to personal, yes.
This absolutely affects everything else.
Yeah. Yep. The fun thing to do would be working on the household budget, just understanding what it costs to break even. I like to, so in that 275 number, which is, what was it, 20 some thousand dollars a month? I like to go, how quickly can I have 275,000 of profit to cover all of my annual expenses? Can I do that by June? And so in my mind, I play games with my business. If I can do that by June, then that means July through December are free, right? Because I've already paid for my entire year's operating expenses. So just different ways of looking at numbers. Yes, ma'am. Before you spend the money, I would do it on a spreadsheet like the one I gave you. If you're looking to be more involved in a software, I would go to QuickBooks Online. QuickBooks Online is going to give you the ability to play around with numbers and click on stuff and things like that. Just understand, and I say this in the nicest, easiest way, is QuickBooks is meant for bookkeeping and accounting. And so I kind of put myself in the same shoes of just because I can log into the MLS, it doesn't make me a great real estate agent. So QuickBooks, although it's a great accounting software, if you don't know how to use the software, it's not going to really benefit you too much. Okay. And I don't mean any, I just want to make sure we're all clear on there's reasons for getting software systems like that. So could save you some money by just doing it for free. And you may have an accounting background, so you're good to go. I always like to preface that. Perfect. Yeah, if you have somebody doing at home doing it for you, then and they understand more accounting world. My focus is like we're all selling real estate. We're trying to drive the business. We're growing and things like that. My preference would be that you're not spending too much time in accounting. That you're looking at it. Yeah. Question is, what is the cadence of reviewing your financial statements? Monthly, hands down. Yeah. Now,
budget because it's very real estate specific and not just like a generic.
Yeah,
you know what I mean?
100% real estate. Yeah. Yeah. Great question. It's what do the big hitters and what do the really successful agents, what do they not do? They don't commingle. Ouch. Ouch.
You just called Philip out.
Don't commingle. Yeah. Hey, I'm guilty, right? It's a matter of like we have the information today and we can make decisions on what we do with it. If we're commingling today, it's a really great day to stop. So, I mean, between my wife and I, we have probably 7 entities. She has 7 credit cards in her purse. She hates it, but she understands the value of making sure that when she goes to the store, goes to do something, that she uses the right business. Because if she pays for business B stuff with business A credit card, she's just changed the financials and now, well, I mean, I get irritated because I have to go in and make entries, but if I'm not paying attention to those things, now I've just increased my expenses on company B that were really for company A, and now I'm making wrong business decisions. Yes. Uh-huh. Yep, I know exactly what you're saying. So the question is really revolved around like if we're not ready to create a legal entity for our real estate business, how do we keep things organized? Because and not commingle. So understand that transferring money from your quote unquote business account to your quote unquote personal account, even though they might both be personal because you haven't set up that LLC, it's not wrong. But what I would do, or what I would recommend doing, is kind of understand where I'm going to go with this. Assuming you set up a separate personal checking account, specifically, we're going to designate it as a business, but it's really personal. Our commissions are going to go there. Our operational expenses are going to get paid out of there. There's nothing wrong with taking a certain dollar figure and transferring that to your personal account. Just understand that's not an expense of your business. It's a distribution in accounting terms out of your business and putting it to your personal. There's no tax thing there. So what it creates, though, is the habit of making sure all business income and business expenses are being paid out of the correct account. When you go get your LLC, then it will be in your business's name, and then your habits still stay the same. Business, personal. You can transfer from your business to your personal, or personal to business if you need to fund. There's nothing wrong with that. But at that chance, you're doing a $1,000 transfer, a $5,000 transfer. It's not, oops, I used my business credit card for my personal account, and now I got to reimburse myself $13.17. Like that's where your commingling comes in, which is what I don't want you to do. Did that help? Okay. Yes, sir. Mm-hmm. Yep. Because it will. Yep. Correct. Yep. Yeah, absolutely. You can transfer $1,000 back and forth 10 times a day if you want. Nothing wrong with that. But just understand that $1,000 transfer out of your business, per se, quote unquote, account isn't an expense. It's just an equity transfer. Yes, ma'am. I do recommend you to set up an LLC. Yep. And the reason for it is because of liability protection. So understand, an LLC isn't necessarily for taxes. It's for an umbrella for liability. Go ahead. Yeah. You can reopen the LLC. I'd probably talk with your tax advisor just to make sure everything's good to go before you do that. And it's easy to open up a different one. And then I don't know the real estate rules in Tennessee specifically. So sometimes if you end up going the whole length of making sure your commissions get paid out to your LLC, you'd have to talk to the broker, because I don't know that part. Okay.
Yeah. And I have a question. Or if you do that, though, if you create an LLC, you have to pay yourself a salary or S corp.
You do not have to pay yourself a salary unless your tax designation on your LLC is taxing as an S corporation, which is a separate conversation.
Gotcha.
So the LLC doesn't say we have different taxes, how you designate the LLC. So a lot of people go, well, I have to set up a new LLC because now I want to be an S corp. No, we're just going to take the LLC that you currently have and we're going to designate it for tax purposes differently. So yeah, good question. Yes, ma'am. Okay, let's define salary so we're all on the same page. A salary would be gross to net wages, paying Social Security, Medicare, possibly federal, and then of course here in Tennessee there's no state. And you have unemployment, there's filing forms, there's 941s, there's W-2s, W-3s at the end of the year. A salary is a true treating yourself as an employee of your business. You would do that under an S Corp election. If you're simply taking $5,000 and transferring it to your personal, that's an equity transfer. It's not a salary because there's no taxes being withheld. So on my example of looking at the financials, that 5,000 wouldn't be an expense. It wouldn't reduce your net income because there's no expense there. Is it a good idea to set yourself up on a salary? It's a requirement of the IRS if you're taxing your LLC as an S corp. So it's not whether we want to or we don't want to, it's required. And if we don't have that designation, then there would be no reason to pay yourself a salary. Yeah. Yes, sir. There are benefits though, right? Like we've got, so you could do, if you want the discipline of it, create the automatic transfer of $5,000 on the first of every month, and you can quote unquote live off of that $5,000. But just understand it's not a salary. It's just a distribution. It's just equity distribution. Yes, sir. we going to hold the profit under the same LLC, or do I need to get a separate LLC for that liability? So the question revolves around if we have rental portfolios, and do they need to be separate LLCs for the rentals versus the real estate? Interestingly enough, on my drive over here today, I was listening to an estate attorney talking about this. It's really where your comfort level lives, to be honest, but they, in the podcast I was listening to, recommended an LLC per property. Now, they say that loosely because you have to understand, like, if the insurance coverage is enough, if you were to get into a scenario that would cover 5 properties in one LLC, then you're probably good. But if it's not, understand one property could get you in a lot of trouble if you have 5 properties under the same LLC. That's going to be a specific tax planning attorney that I would recommend you talk to. I don't want to answer that one. Sorry.
This was great. Thank you so much.
You're welcome.
Everybody online was saying how awesome this was too. So we'll definitely.
Who knew numbers could be so fun?
Who knew numbers could be so fun? Yeah. Well, I love what you said too. My favorite aha was you said over and over is numbers are not good or bad. They're just numbers. They just are what they are. So no matter where you are right now, it's just a number, and you can very easily like play around with the numbers to get what you want out of it, as long as you do it in a smart way and with somebody who knows what they're talking about. So I love that. I'm gonna start saying that all the time. Like, the number is just the number. It's not good or bad. It's just is.
Yeah, and the best part is if we don't like it, we can change it.
Yes, love it. So I'm definitely so glad that you came. And there are probably some people in here who will want to talk to you. And I think could definitely use your services. And I know you weren't here to sell it. I appreciate you coming to to teach us, but I think definitely we could use the benefit of your services. Sarah spoke really highly of you. She had a last minute. Well, it wasn't last minute. I think we ended up pushing this date around a little bit. She had to go to Puerto Rico she got to go to Puerto Rico
That
for
business meeting that's on your P&L.
business meeting. She gets to write it off, and sounds like fun. So thank you so much.
Thank you.
I appreciate it. Hey, don't miss out on Gibson's Donuts, because I promise it's a Memphis staple.
Appreciate that.
Okay. Thank you guys so much for coming. Y'all let us know if you need anything, and I'll make sure that y'all get David's information too, or you can stop and talk to him if you're here. Thank you guys. Appreciate you coming out here. I know you drove in this morning, didn't you? Yeah. Good.
I'll stick around if you guys have questions. We're happy to help out where I can. Right there.